The kind of discussions that happen at this conference really opens your eyes to a lot of innovations that are presently happening in our country in the financial inclusion space. I think it's a wonderful occasion for all of us to come together.
Hi, it's great to be here at the Inclusive India Summit 2019 in actually bringing big drive into financial inclusion in India.
The kind of discussions that happen at this conference really opens your eyes to a lot of innovations that are presently happening in our country in the financial inclusion space. I think it's a wonderful occasion for all of us to come together.
Hi, it's great to be here at the Inclusive India Summit 2019 in actually bringing big drive into financial inclusion in India.
kind of discussions that happen at this conference really opens your eyes to a lot of innovations that are presently happening in our country in the financial inclusion space. I think it's a wonderful occasion for all of us to come together.
Hi, it's great to be here at the Inclusive India Summit 2019 in actually bringing big drive into financial inclusion in India.
The kind of discussions that happen at this conference really opens your eyes to a lot of innovations that are presently happening in our country in the financial inclusion space. I think it's a wonderful occasion for all of us to come together.
Hi, it's great to be here at the Inclusive India Summit 2019 in actually bringing big drive into financial inclusion in India.
Good afternoon, everyone. Welcome to the second webinar being organized by Access as part of its Inclusive Finance India webinar series. Given the unprecedented manner in which the pandemic has shattered the economy, the webinar focuses on its most vulnerable and affected segment, the informal sector that constitutes 75% of the economy. Majority of them have irregular and uncertain employment, lack of access to institutional insurance, savings, investments, and health protection, and so on, and near zero financial resilience to tide over employment uncertainties and other emergencies. The pandemic has highlighted these vulnerabilities in distinct, diverse, and in some manner, sometimes dramatic ways. While a few policy measures have been announced over the last 3 to 4 months to bail out some segments of this informal sector, they unfortunately continue to teeter on and are on brink of collapse. Through this webinar, Sustaining the Informal Sector, Building Their Economic and Financial Resilience, a group of eminent panelists will analyze and assess the policy environment and propose ideas and perspectives on how the vulnerabilities of the informal sector could be reduced. given the new thrust on Atmanirbhar Bharat, new ideas of more strategic and structured ways of formalizing blue-collar workers are being designed. Only yesterday, it was announced that Niti Aayog will develop a portal that will connect 200 million blue-collar and gray-collar workers with job providers, with a vision to provide them sustained livelihood and in their home states. We have an excellent eclectic speaker lineup for this event, composed of a policymaker, economist, development practitioner, and an industry side actor, and a moderator who's a researcher and policy commentator. So without further ado, I would like to introduce this panel. Dr. Shamika Ravi, Director of Research at Brookings India, Mr. Ajit Pai, Distinguished Experts at Niti Aayog, Mr. Narendra Nath, Executive Director at Pradhan, and Dr. Anand Srivastav, Founder and Chairman of Intercorp Group, and also Founding Chairman of the BC Federation of India. The panel will be moderated by Dr. Lavish Bhandari, who's Director at Indicus Foundation. I thank the panel for agreeing to our request to join this discussion, and I am very positive that we'll be able to take away some concrete forward-looking recommendations for building resilience in the long run for this segment. So now I hand over the charge of the session to Lavish to initiate the discussion, please.
Thank you, Radhika. Good afternoon, everyone, and it's a great time to actually go into some of the issues that are facing the informal sector, and the issue of resilience is an excellent topic, I feel, to talk about it, especially at this time. And as Radhika has just said, we have a scintillating panel. I mean, we have a great policymaker, someone who's been in charge of looking at policy both from within the government and outside. We have someone who's involved right now in making policy. We have people from the industry represented here, as well as that from the social space, as Radhika has just mentioned. So without further ado, I mean, what I'm going to do is I'm going to first ask all the panelists to just share with us what they are doing right now and what they feel are the current challenges, as well as the long-term challenges that they feel are primary from our perspective. So I'll first ask Ajit to share his views. Ajit, you're on mute.
Yeah. Yes, thank you. Good afternoon, everyone, and thank you so much, Lavish and Radhika, for the introductions, as well as for inviting me to participate in this discussion, which is very, very relevant in the environment that we are today. So to begin with, just to talk about Niti Aayog's priorities right now. So Niti Aayog is the policy agency, the think tank, and also the agency for fostering cooperative federalism in the country. And given that we have this very, very broad mandate and lots of flexibility, during a time like COVID, we were called upon in our different capacities to try and figure out solutions to some of the problems that have been highlighted by Access and laid out in the concept for this particular discussion. So the first thing that when we started looking at these issues, way back in March, when the problem was becoming very apparent that India would be impacted quite significantly, was on two things. It was one, the first part, which is when you're talking about sustaining the informal sector, we were questioning, how big was the informal sector? And very interestingly, when we called a meeting of leading economists to come and size what percentage of the Indian economy is formal relative to informal, and the numbers that we got were with a very, very high degree of variance, let's put it that way. So what we do know is our GDP estimates, a lot of which has been questioned, where that data comes from, how accurate it is. A large part of some of the questioning is what percentage of the Indian economy is formal and informal. I think from an employment perspective, the answer is more straightforward. We have an provident fund, or we have certain instruments that would include folks within formal employment. But even as sectors, what's actually being measured through the financial system, those numbers, it's very difficult to gauge exactly what that is. So when we look at the second part of what the topic for today is, which is building the financial and economic resilience of the population that falls into this massive bucket of being the informal sector, we actually are lacking a lot of data. So we don't have much data about what the income is. We have lots of conjecture. So we've gone and spoken to many experts and many groups from different industries, whether it's the retail sector, the hospitality sector, the mandis, the hawkers. So we've done lots of these exercises in trying to size some of these markets, and particularly when we're trying to see how to help them out during the early stages of the lockdown, how to reach these people even before pre-lockdown. But what we found is that the data was lacking. Now the country has made tremendous strides in the past 5 years in what I would call is the formalization of the informal, not necessarily in bringing them into the economy in a measurable way, but in laying out what I would, what the government calls a jam trinity. The Jan Dhan account, which sort of enables a segment of the population, the Aadhaar, which had already been rolled out, so more than 1 billion Aadhaar unique identifiers, both economic and identity identifiers out there, and then the mobility, which is an unprecedented number of people in the past 6 to 7 years entering sort of the communication age, well before a leapfrog to mobile wireless, relative to connect with the rest of the world. So this actually, the way we see it, was an enabling infrastructure, and what it potentially could afford would be lots of things that could improve our systems. People, I'm sure, are going to be talking about today about DBT and how that can happen more frequently, which is enabled by some of this infrastructure. But very broadly, when we are looking at the financial and economic resilience, all I can say is that this is still very much only the foundation. It's the very basics. So it's like building the roads, building the gas stations, having a few cars on the road, but we've got to figure out how to be giving gas and whether people, how will they get the gas and how far they could go with that. And I think this financial and economic resilience, a lot of the questions that we're asking is going to be how much we can formalize these people, and what do we have to do as policymakers to make formalization less scary, both for the employers and employees. Because unless we have the data, unless we can measure what's really going on, how much the economy is improving in real time, or at least close to real time, it makes life very challenging for policymakers. Also, unless we can measure who's really impacted, how many migrant workers in Delhi, for example, as a question, and trying to size that, and how many of them employed by the informal sector and in what categories. So these exercises that we went through would have been much easier if some of this infrastructure that you're talking about was in place much earlier, and some of the data was tracked much better. So these are the challenges that sort of we saw when we are addressing this. We've addressed it in various ways as a government. You're seeing, the basic things like a program like Manrega, which has a long legacy. You're seeing a huge boost in the employment there. So we're trying to sort of allow these programs to be catch-alls for whoever gets left. We're looking at the PDS system where the amount of distribution was increased with these. But all of these are the very basic sort of elemental, Maslow's hierarchy of needs, just the two basic building blocks. These are just in terms of providing first aid and, just basic things. It's not about their financial and economic resilience. So I look forward today to seeing what the other panelists have to say, as well as, any ideas that we have on how the direction in which we have gone so far, about what could be done to strengthen it, as well as getting better visibility into some of the sizing of some of these problems, and from a policy perspective, what are the steps we can do with minimum leakage that will be very efficient in reaching a sector that so far is informal, but we would gradually like to have much better data on going forward. Thanks so much, Ramesh.
Thank you, Ajit. Shamika, I'd like you to go on now. I'd also like you to just address a little bit of this data issue. How much of a challenge is that in the sense of designing policy towards the informal sector?
Thank you, Lavish, and thank you to Access for putting this together. Financial inclusion. If you recall, we started out by talking about microfinance when this whole forum was put together almost 15 years back. And now, of course, we have moved on to talk about financial inclusion broadly. But I'm glad that we have expanded the scope to talk even more broadly about, let's say, the informal sector or the concept of resilience, which is just finding its way beyond the urban literature into mainstream, let's say, development, policy design. But for those of you who've been in this sector of long enough, if you recall, a lot of the early conversation around financing used to be around credit. So we used to have the year of the microcredit. It used to be almost entirely a conversation about credit, which is a limited financial instrument. And while it is very fundamental, but many of us were glad to move the conversation towards microfinance more broadly. And then the whole idea was, this was microfinance for micro enterprises, which meant that we really wanted to think of financial inclusion and providing instruments to households such that they would move on to a path of self-employment and sort of self-reliance and sustainability and so on. However, what we have clearly realized now, despite years of moving this conversation in the policy circuit, as well as, I think, experimentation within the industry itself, is that, the conversation is still very much limited to a few instruments. And right now, given that we are in the midst of a pandemic, a health urgency of sorts, it's important to, again, take this conversation back to why instruments like health insurance, why this entire move towards Ayushman Bharat were very, very critical for the country at a time that it happened. The whole idea around designing better savings instruments, if we went to, beyond savings to insurance towards better savings, and why PMJDY became such a cornerstone for the JAM Trinity that Ajit spoke about a little while back. So instrument design, product design, we have just so much more work left. We are right now scratching at the basics as far as, better sort of access to financial instrument for the bottom 40% of the population is concerned. But clearly the conversation is moving. There's been a tremendous amount of work. If you think that now we are putting together the building blocks for social stock exchange in the country. We have started to see incredible growth in the whole impact investment side of the sector. We are seeing some remarkable and successful experiments as far as, let's say, impact bonds in the health and education space is concerned. So there is great amount of experimentation. And of course, with the advent of the government and the government taking on financial inclusion as a core agenda in itself, a lot of the task has been done. If you think in terms of giving access to bank accounts, we've been thinking about access to bank accounts as one limited measure of financial inclusion for now 25 years. And yet PMJDY sort of within a couple of months did manage to achieve that. And I think that's why this conversation from the industry and sustainability side now has to go towards other instruments. We have to go beyond a simple savings account and simple loans and credit towards more nuanced instruments. And I think insurance is an important area to think, and Ayushman therefore becomes an important, a fundamental cornerstone as far as financial inclusion and resilience is concerned. But just as Ajit mentioned, we are a large country. There is a great degree of variation across states, and that's why I think you need an institution like NITI to constantly, bring states together to learn from one another. The whole concept of cooperative federalism or competitive federalism also, because it tends to work as far as investments and jobs are concerned. But talking of Ayushman Bharat, while it started and it has tremendous promise, now think about what does it mean for healthcare and impacting out of pocket for ordinary citizens in the bottom 2 quintiles, right? Given that it's a financial instrument, it is only as good or bad as the healthcare that it can buy. It is a financial instrument which is meant to support hospitalization. But we do know that across the country, across the states, there is great variation in terms of the actual healthcare sector itself. We have states, many states, Chhattisgarh, Kerala, Tamil Nadu, Goa, Himachal, where the public health system is strong. So naturally, if you think of sustainability of Ayushman Bharat, as a large publicly financed health insurance scheme, it is highly sustainable in these kind of states. But then there are many states, UP, Bihar, Jharkhand, Rajasthan, MP to a large extent, where a significant part of healthcare delivery is in the private sector. And there we do know that the nature of private healthcare delivery is such that cost escalations very quickly become the feature of that. Now imagine publicly financed health insurance scheme, which is run on the back of delivery, which is fundamentally private. You will see sustainability issues. It will bog us down in a couple of years moving forward, because that is the core nature of public versus private. So now we have to think of sustainability of these core programs of the government. Of course, it's all within the larger economic and financial resilience of bottom two quintiles, but these also become core problems for the government to grapple with. Now, of course, at the heart, we have to realize that from the fundamental growth strategy, we can, every time we think of these issues of informal sector, thinking of jobs, thinking of designing better policy, whether it is, again, market solutions or from the government, we have to remember that everything becomes very costly when we are trying to think of solutions for a market segment, or let's say a part of the demographic which is fundamentally badly educated and in poor health. So there is no way we can think of this, the dream we have, and I, for one, am a big champion of that. There is no development without fundamentally getting our growth back on track. And yet growth becomes very, very difficult and costly for this segment of the market, whether through the government or through market solutions, if we are not going to fundamentally restructure and reform our core healthcare and education sector. So I think this pandemic is also a sort of a call and a huge window of opportunity for us to sort of restructure the way we are thinking of human capital in this country. Now, in 1 minute, Lavish, on your question of data, 5 minutes, I mean, we can go on about data. And I feel very blindfolded every time I think of designing policy in India, because even right now, for instance, let me tell you, I put out daily updates on the pandemic. I still rely on Johns Hopkins national level data. I rely on a crowdsourced data for state level statistics. Very few district level statistics are even there. And this is when all of us are fundamentally locked down in our houses, when the economy is working at much below capacity. We do know that we are in the midst of a contraction. Data is at the heart of, I think, a lot of that, that high cost that I'm talking about. Because we are forming policy with very limited empirical evidence, with very limited empirical knowledge of things the way they are. And this comes all the way down to the district administration. And right now, for instance, we can tell NCDC should have more data, ICMR should have, the ministry must have. They are also looking all the way down to the district level to send them the data. And I'm staring at this entire apparatus, which is extremely fractured. Extremely fractured. So I think while we are working in certain sectors, and Ajit also alluded to it, data, this entire overhauling and tightening of this architecture is absolutely fundamental. Otherwise, we are back to the 6 blind men and the elephant. Of course, a small grace is that states are making tremendous progress on their own as well. So we mustn't discount the fact that while on the whole this data problem is a gargantuan, it's a massive problem, but there are also exceptionally good progress that we have seen in smaller scales happen within states of the country. And I think that is where the common platform, Niti's role, learning from each other, etc. And of course, the remarkable work that is happening in the private sector as far as monetizing data and really using data and analytics to think of market solutions is concerned. I think there is tremendous amount of scope for the government to also work with the private sector on that count. So thank you.
Thank you, Shamika. And as you said, data is something which lies at the core of any planning process, or for that matter, any policy design as well. And I would just like to add that data is also not just an input that goes into policy. It is also an outcome of how much we invest in it and how much we value it. So with that, I'd like Naren to talk about his work and what his views are on that. You're on mute. Yeah, you're on mute.
Yeah.
Okay.
Can you hear me now?
Yeah.
I just wanted to ask, in the initial segment, I go a little bit into the current challenges, and then we have a second round when we have a slightly...
That's right. When we'll pick up a topic, yeah.
Okay, we'll get into more details of the...
Right. Right now, just talk about your work and how you see it.
Okay. Thank you, Lavish, and thank you to all other panelists, and thank you to Access for this opportunity. Good afternoon, everybody. So I am Narendranath. I work with Pradhan, and unlike the other panelists here who are much more wiser and knowledgeable, I work with I worked in organization, and my main asset here is my practice. So we're more of a community-facing organization. So we work primarily in central and eastern India, and mostly in the tribal area. So that is the experience from which I would be generally speaking about, more anecdotal, more practitioner information than maybe more empirical and global data. So this pandemic, Corona, as everybody else, it kind of caught everybody in a big surprise, including the tribal communities that we were working with. Everybody was kind of, taken aback and, kind of shocked, more due to the lockdown, and not so much because in the rural areas, even now as the pandemic is gradually now obviously descending into the rural parts of the country as well. But at that point of time when it started, it was more of an urban phenomenon. So how it affected the villages were sudden loss, the sudden lockdown of the mandis, the markets, transport and movement and mobility and everything, and loss of employment. So you had crops standing in the field, you could not sell it. All the local other any employment opportunities, including government run programs, they all shut down. And then on top of it, after a couple of weeks, you had the massive influx of the younger people from the villages who had migrated to other cities. They all started descending back. Now that created a little precarious situation for everybody. So initially there was a panic and there was a fear, stigma, which we obviously, as people who are very close to them, and we had community institutions and the self-help groups, the federation, our community resource persons. So we tried to kind of bring some sanity into that, trying to talk to them. I don't know, okay, this is a major crisis. We need to kind of deal with it, but we need to be at peace with oneself. You need to take the basic precautions. So the health messaging, etc. So I think all of us were involved in that. And there was another big crisis of basic lack of any necessities, essentials at home. So then we had to launch a massive program of providing people with food and medicines and sanitizers and many other things. So this is, I think, like almost all the community facing organizations, like we all did, we all went through that. And then gradually came the time of, now what do you do now? So because the major challenge at that time was the Kharif was a couple of months yet to come, and now obviously everybody's on the field right now. That time the issue was, how do you now plan for agriculture? Because one doesn't know what is going to happen. Will the markets open? Will we be able to get our input supply, the seeds, the fertilizers, the credit? Everything was so uncertain. So that was our biggest challenge at that point of time, how to actually help people restart their economic activities. Everything had shut down, but at least the agriculture was an opportunity. And fortunately, at least in the central tribal areas today, is raining much better compared to last year. So people are now into farming. But the issue here is, which I'll later on speak a little more about it, that the agriculture production system, which is in the village, now has to deal with much larger number of people than it was earlier, because of the massive influx of the people into the villages. What has happened is, in a typical village in Jharkhand, let's say the population would have gone up by about 25 to 30%. So it's actually adding maybe 20-30 households additionally to a village which is a typical village of 100 households. So that is a big increase. And now there are additional mouths to feed, additional hats to be employed, additional people sitting idle there, so people had to be employed. So that is the current biggest issue, as to how do we now creatively provide employment to the much larger number of people today. As it is, the resources were stretched. As it is, everything was, suboptimal in the village, even with what was available. Now, with more people there and more, hands and mouths to partake what is available, that has become a big challenge at how to now spruce up production. So we are doing something. I can speak to you about that. But now, after this influx of large number of people into the villages, now the situation is that a lot of them will go back, right? But at the same time, about 30 to 40% of them might want to stay back, because they were anyway in some kind of very lower level menial kind of employment in the cities, and God knows when that will start. So when, as Shamika just said, we are in a contraction phase where the economy is actually operating slightly much below their its potential. So a lot of hands have lost employment. So they're all back in the villages. Even if some people are to go back, there will be still people in the village, and some of them might actually want to stay back in the long term. So there is a big challenge of how do we now enhance the quality and the quantity and the returns from the various production systems that is in the village. So that is a big challenge as we face today. And as a practitioner organization, obviously, we are trying to find solutions, and there are certain things that we are doing in terms of helping production system, helping the
excellent.
So we're doing looking at
excellent, and so those are some of the things that we will be talking about as we.
So there will be there'll be some time to speak about it.
Yeah, absolutely. So thank you. I mean, those are very, very interesting and very illustrative comments on what the situation that we are facing currently is. And I'd like now Anand to just share your views about, from the industry side and people who are at the forefront of delivery of some of the new mechanisms of financial inclusion. I mean, what are your views, and also what are the kind of challenges that you see right now as well as in the future?
Thank you, Ravish, and thanks, Access, for giving me this opportunity to talk about and share views on this very, very important point. The line which I'm going to follow as a practitioner, as BC Federation has about 8,75,000 business correspondents across the length and breadth of India, and has been largely responsible for the phenomenal success on the JDY accounts and other things also. Is that why is it that certain products work in the past, and why, let's say, like JDY, and why some other products like the Swasth Bima Yojana or the Jeevan Jyoti Yojana, and recently the PM Swanidhi or the MSME are not working, is because if I were to just sum it in 4 words, is Niti hai, Ayojan nahi. I mean, no puns intended in this. So we have the policy is right, the intent is right, and the delivery is right. So then why is it that certain products work and why they have not? We all talk about the JDY accounts and the millions of JDY accounts. In fact, in the last 3 months of the COVID, 2 crore JDY accounts were added, because the right product is there, it is pitched right, it is delivered right, and it is compensated right. Hence, there is is this. So now here and about, as a practitioner which faces, quite frankly, not on the last mile but in front of the eyeball, is about 38 crores beneficiaries or customers, which my organization faces on a daily basis. Now, what happens is that the initiatives till now, and including the ones which have been included in the economic package, are from the supplier side. They are not coming from the side of the customer. While the need is there, but actually what is required, and what do they require, and how do they require, and other things. We can have a separate session on the insurance. But here today, I would like to talk about, dwell on the 2 things. One is the Swanidhi, and the other is the MSME. also touch upon it. The intent is right, the money is behind, and the whole architecture has been laid out. But the thing is not there, that what is there, and as Shamika was talking about, there's no data. This is in fact a great opportunity for us to get very high quality data, because the people are there, the infrastructure to deliver is there, and quite frankly, the products are also there. So, for example, in the Swanidhi, while it has been said that, okay, get the data and there are 50 lakh data, most of the mobiles are switched off. The people have perhaps left for their for their villages. So whom do you track? And then the data is not even forthcoming. On top of it, because it's a supply side, you'd be surprised to know that there is only one bank which has come forward, that is State Bank of India, that okay, you deliver this. On top of it, they have made the entire process paper based, and they say that we'll give you 25 rupees for this. Now the whole thing collapses there. That how do you collect paper and do all this thing and do this? As far as the MSME is concerned, only top-ups are being given. So when we said, okay, why don't we go and source, because we already are present in the length and breadth of India, there's no new loans. So first to credit MSMEs are not to be sourced. This is the direction which we are saying. So right now we are sitting, quite frankly, we can fix the moment we fix the products, we can both generate good quality data for both these sectors and benefit the economy in the long term. So I quite frankly see it as a huge opportunity for the nation to develop its use this few months of, or maybe even 12 months of the crisis, to ultimately come out and emerge in the long term as a great economic builder. Thank you, Manish.
Thank you, Anand. I think that's one of the critical elements of what you are saying. I mean, we have all the, in a sense, all the pillars are in place. And one thing that I would like to add is that we have an amazing technology backend, which is probably amongst the best in the world, if not already the best in the world, and which is highly scalable and extremely low cost. So I think we have all the elements in place now. As far as I see it, at least on the digital side, it's a matter of just pure tightening the screws and so on. So I'd like to move to and start the basic the main discussion starting. And I'd like Ajit, you would mention this really term which I find quite fascinating, and I call it the formalization of the informal. Now, clearly, it's very clear that the long-term resilience will require some measure of formalization. And I'd like you to talk a little bit about that. What do you think are the current and also expected, or in the future, what do you think should be the direction that policy needs to take to very quickly ramp up the formalization process? Ajit?
Yeah, so on the formalization side, I think when you look at a developing economy like India, one of the key things that you remember is that the base of the pyramid is much broader than the peak. So if we have a look at the new global order in terms of looking at fiscal deficits and looking at structures of government borrowing, what is very apparent in India with a $2,000 per year sort of per capita GDP is accompanied by a very small ratio of people that actually file tax returns and pay tax returns. So less than 6% of the population files taxes. I think less than 3% actually pay them. Some of them that file them just do it because otherwise they won't get their taxes back, what's deducted. Supporting numbers that I think Dr. Ravi, Shamika Ravi just provided you, which is you're supporting almost 40% of the population, or about 500 million people, with all kinds of programs that are not necessarily cheap, which very clearly that segment of the population can't afford. So one very clear sort of need for formalization of the economy is not just the data and the measurement of the overall economy, but was also to increase and broaden the web. The tax system was, extremely prohibitively highly taxed, many years ago, but that's come down to very reasonable levels today. Is to try and change the culture, to start bringing people into the contributors into the government, so the government has more to give the people at the bottom. But what's very interesting with this current experiment, which has happened, in fact, I won't call it an experiment anymore. I would call it a very successful project of the Jan Dhan, driven by, organizations like Dr. Srivastava's, is that we've actually rolled out a system at the base, and we have all these products for, these fintech products, where people have adopted getting into the formal system without fear. The previous fear of the MSMEs is when they joined the formal system, it was compliance, it was tax harassment, it was rent seeking from various people. So all the fears that individuals and organizations had is what was preventing a lot of folks from joining the formal system. But now, as we are seeing this web of people becoming part of the system, as we are looking at programs of getting these people on board into the modern world through this technology, what has been missing is the fear, which is incredible, because we might actually be able to formalize the system if everybody who's going to be getting something has an Aadhaar card attached to it with an employer that is not necessarily an F4 provider because they're too small to be that. So we are seeing this magical transformation in the system, which if we hadn't had an event like COVID happen, might have magically led to us understanding our economy better, because this jam trinity is fairly new. Having all three elements working together is fairly new. But there's one element I think that hasn't entered the discussion so far, and I think it's very important to put it on the table in the line of discussion that you've opened right now. And that is, just having the jam trinity is not enough. What is missing in our country is actually financial literacy. So it's not enough to have the technology. It's not enough to have the connection. It's not enough to have that bank account. If you don't know how to use it, forget about the range of products, even that basic usability is not there. So if you look at the number of Jan Dhan accounts that are being actively used, it will tell you a story. It will tell you what's really going on. So what I would say from a formalization perspective is just providing someone with a car and not teaching him how to drive is not enough to get those cars on the highway. Even if you fill up gas, it's actually not that helpful. It's infrastructure that's being underutilized. What we really require is a financial literacy program in addition, where the people that are getting this infrastructure out there will figure out how to use it, and programs, whether they are educational programs, whether they are product-based programs like insurance, like other things, we've got to figure out how to get that included. Now, from a formalization perspective, very specifically to answer you, it is not just providing that thing. If a lot of the commerce happens outside of the jam, if a lot of the things continue in the way they are, it's not going to help that much, even though this is an enabler. It's necessary, but not sufficient. We've got to start focusing on what will make it sufficient.
Thank you. Shamika, I'd like, you've already had this, made this fascinating point that there are all of these massive state level differences, and the structure of the state, or rather of delivery mechanism, also has an impact on the eventual usage and success of some of these programs. So we like to, in the context, especially on the formalization of the informal, just mention a little bit about the state level differences and how they might play out, especially given the fact that JAM is going to be one of the important elements of delivery as we go forward.
Well, I have a slightly different view on formalization. Okay. You see, there is very little economic literature to support that formalization by itself is a good thing. Meaning the simple act of formalizing or registering firms is not an end in itself. It means many things. You see, many firms also avoid formalizing because of the regulatory burden around formal entities. So we have to think of the distortions and the incentives within the system. So now we're thinking of taxes. We're thinking of subsidized credit. We're thinking of all these different buckets which we have created, because of which we have distorted access to financing, etc. financing I'm using just as one sort of input into running of whatever business you want. But eventually it is about reducing regulatory burden. The act of formalization will only lead to an improvement overall. And more than anything, of course, finances of the government, as Ajit said, I am concerned about finances of the government. More and more entities and people must pay taxes. But more than that, I'm fundamentally concerned about the productivity of the firm itself. The fact that a lot of our firms, not just in the MSME, but high end as well, they work below, very low productivity level, is because of these regulatory burdens. So I think eventually the idea around formalization has to be one where more and more contracting, whether it is in the labor or purchase of inputs, land, things are contracted formally so that the disputes can be settled faster, cheaper. See, taxation becomes one aspect of formalization, but the whole process is about making the regulatory burden simple and cheap. That's when productivity growth is going to happen, and that's when you see overall growth, and by sort of extension, the government being able to efficiently tax.
So, Shamika, on that point, I'd like you to, because this is something that we have been speaking about for the last, I think, since 1950 at least,
sure.
Perhaps before that. So, can you give some thoughts on, what is a precise policy tool that can help address some of these? I also include Inspector Raj in this, and the municipality Raj in this, and so on. So can we at least identify 2 or 3 critical points that the government needs to do to get rid of these kinds?
You don't have to reinvent the wheel, Amish, because you see the whole idea and why we have started talking about ease of doing business, why it has become such a fundamental aspect to our public policy making in the econ space in the last 6 years. We are almost every conversation that we have on the economy, eventually, whether it is jobs, whether it is formalization, eventually it comes down to this aspect of why we need to improve the business climate, why we need to become business friendly. But that entire thing has to do with reducing the regulatory burden. So when you say what exactly should we be looking at, so far when we calculate ease of doing business, we are looking from the regulatory side. So what has the government done to improve, to lower the burden? So we have digitized several compliances. We have got the single window clearances, many things. FDI rules have been simplified, etc. When we start ranking and looking at states from the supply of regulation side, you get one side of the story. What right now Niti Aayog is sitting with is a massive study we did 4 years back, which talks about the demand for regulation. That look, we have improved ease of doing business and our ranking has improved from the supply side. And yet from the demand side, the firms are telling us that look, there are implicit and explicit costs attached with certain things. I'm putting implicit costs in quote unquote. We have to really get down and understand why is it that the enterprises are not able to scale up. Is financing the issue? Is it the Inspector Raj that you're talking about? You see, if you have 16 physical forms to fill versus 16 digital forms to fill, there is not a big improvement. So there are many, and unfortunately, there is no silver bullet, Lavish. It will require the entire life cycle of an enterprise, from registering a firm to winding up of a business. That and fortunately, that survey, it is about 4,000 firms across the country. These give you good estimates of exactly what the costs of doing business are.
Thanks, Shamika. So I think that's a great cue for me to start and ask Anand on in the business correspondence space. What are these burdens that prevent the ramp up of the BC businesses?
There are several, Lavish. To start off with is that what happens is that while as a delivery channel, we have been established and recognized and are quite frankly flourishing. However, when it comes to integration on the actual delivery, there are many intermediaries who claim their cut, and not only their cut, but also their bureaucracy comes with it. For example, mm, uh, uh, and I come back to the current situation of the Swanidhi. Now, there is a portal set up by SIDBI.
Can I, before you proceed, sorry, can you just describe very briefly Swanidhi to some of our participants may not know?
Yeah, the Swanidhi is the street vendor program, which is supposed to impact 50 lakh street vendors across and deliver them 10,000 rupees as a soft loan, and of course on the other side the MSME credit to the MSMEs, these are the two big employers. Now, the paradox is that while we can in 3 months get 2 crore new accounts into Jan Dhan, 50 lakh accounts are been unable to be done since July this year. The reason is the delivery of the product. We are not allowed. There is a portal on which the entire data needs to be ported. Who has been given the rights? Banks have been given the rights. Now the bank has been given the right who are not interested to deliver the product. We are interested to deliver the product, but we have not been given the rights. Secondly, there was a talk on the data. Right now, as this particular scheme itself is one can say in many ways is an out-of-box solution to come to at the bottom of the pyramid, quite frankly, in the retail chain. But there's a huge number of people. They have been said, okay, get the data. There, first of all, there is no data. Whatever data, limited data, has been made available is dated. And the second thing is that no other innovation is allowed in this. My simple thing was that we have told so many times that there are people, there are every city has several of Vyapar Sanghs, the trade associations for each locality, and in which the people are members, because they work just like in mandis. They work on purchase, small purchase based on which they give and take material. Use that, leverage that registration to get onto the system. So at least you will have.
I can't hear you, Anand. Can I ask everyone to switch off their video for a minute? Let's see if that will help. Anand? Okay, so we'll go on to Anand a little bit. So if it's just his internet connection that's the problem, then I'd like to move on and talk to Naren on the challenge in the rural part of it. And there's this whole opportunity that we have, which is now opening up, and that's related to the agriculture value chains, which ties in very well with some of the issues that you were talking about on the great need for increase in production as well as productivity. So, can you share your views on that?
Yeah. So I think
just a minute. I think Anand is back. I'm sorry. If he is, then I would like to finish.
Yeah. So to take the sorry for that. To take the data from the Vyapar Sanghs and get on with this. So once we have this, we will ultimately have a large database. Similarly, for the MSMEs, there are MSMEs who they have never taken a loan, but they have Provident Fund registrations, they have ESIC registration, but banks don't source them because they have never taken loan. So allow the delivery channel, give them freedom to go and access rather than be dictated by the banks, because they are not interested in going to these customers.
Great. So thanks. So I'll just ask you to just pause on that one. Sure. Because I think the critical point that's happening here is that the solutions are known to some of the kind of regulatory burden. The issue essentially has to do with, are the people across the chain more responsive to some of the solutions that are coming up from within the chain, right? And that's something that India definitely needs to work on, because these solutions that you're saying, I'm sure that people in the RBI as well as the Ministry of Finance and elsewhere would be aware of. And it's just a matter of how long it takes to be able to embrace some of these solutions. Am I right there?
Lavish, no, I would beg to differ. If they
Okay.
were aware of, then why have put these hurdles?
So
why not give the login?
Okay, fine. So it's essentially it just seems to be a communication failure. I mean, if there is solution somewhere else, why would the person designing this thing not be aware of it? And when I was just let me finish that point. Yes, I would like. This is something, there are a whole range of issues related to these kind of bottlenecks that come up. And one of the problems has to do with distributed ownership or distributed responsibility over some of these things. It's just not just a central state issue. It's essentially has to do with the regulator versus various ministries, and also sometimes some other entities which might be public sector banks and so on. But there is a solution here, and that's the beauty of it. That is just a matter of sitting down across the table and just tightening the various screws that are loose. Now, having said that, I'd like Ajit to give a quick response, and then I'm going to go to Naren.
So I think, to the point, Dr. Srivastava's point, it's misaligned incentives. The banks just don't have the incentive to give these small loans. Their cost structure doesn't permit it. We started a new organization just about 30 years ago called the Regional Rural Bank. They've now managed to, through the Supreme Court, change their compensation structure. So they now have the compensation structure of a scheduled commercial bank. And the overall operating model doesn't allow it. So the RBI is in denial, I would say, because they believe that the structure is okay. And the scheduled commercial banks just don't have the incentive. So I would call it more inertia of the incumbents. It's what they call similar to the iron frame. There's no incentive for anyone to change because no one is being measured. Neither the RBI nor the scheduled commercial banks are being measured on their level of financial inclusion, other than through the public sector, what you call the priority sector lending requirements.
That's a fantastic point, and I totally.
So that is the issue. So we need to start actually aligning incentives in the direction of where we want to head. And I completely agree with Dr. Srivastava's point that there has to be a way to enable this without creating any moral hazard for people at the front end, giving the same kind of things that we accuse happened in the 2010-11 timeframe of giving loans to anybody and everybody. I mean, there've been lots of scams in the past also.
Right.
So, but you have to keep that in mind.
Right.
But as long as we satisfy that.
Yeah, but I'm going to pause that and go to Naren on this issue of agriculture value chain, and which I think has great potential. And do you feel that all the pillars are now finally there from the policy perspective, and also from the existence of organizations that can enable it? And what are the kind of challenges that you think we have ahead of us? You're muted. Could you unmute yourself?
Yeah. Is it okay now?
Yeah.
Sorry. No, I think as the discussion was just happening between Dr. Srivastava and Dr. Pai, I mean, the issue is at the last mile. And we are an organization that works at the last mile in trying to connect those dots and build a resilient demand system so that, the supply side actually then is able to respond. I mean, in sense, let's say if you come to the specific issue of agriculture value chain, I think what we require is, pitched and focused work at the village level to build that demand system so that, the rest of the markets, in a sense, including the market institutions of credit and other inputs, are able to go there and, do business in a more commercial manner. But that requires huge amounts of public investments to go there. As we said, the bottom 30-40%, we are actually talking about the bottom 20%. They are actually so poor and less endowed. Therefore, you need to have massive investments happening there, in which then you can actually rebuild the rural economy. And as you correctly said, there's a big opportunities there. And for our nation's growth also, I think the big, the big chunk which we can actually contribute much higher to the country's growth is if we can actually rebuild the rural economy itself, which is right now lying in shambles. And we all saw it. I mean, as the COVID and the lockdown hit, how the rural economy was really suffering. And because, the no last mile linkage existed and everything was literally in shambles and literally Ram Bharose. So, how do we build that? I think that is a big challenge. And there's some solutions, as I said. One, we have to look at the rural economy as a total system. You cannot look at agriculture or one or the other issue only, because everything is so linked with each other, and the rural population in that sense is highly interconnected in terms of their, the give and take in various industries and various economic activities that they do. Therefore, we have to look at the farm, livestock, and in the places that Pradhan works in, the forest. So the farm, livestock, and forest economy is highly interlinked and linked as well with the non-farm, the manufacturing, the wages, the local other services, and transports, etc. So you have to look at the rural economy in toto, and in the biggest driver there obviously is the farm-based economy. So therefore, if we can actually make much more investments into how the farming gets done, looking at the production, processing, and marketing as a coordinated whole, then I think that is the way in which we are trying to go ahead. So one is to enhance the production. Most of the places we work in are deficit in most of their even basic food to maybe more higher value produce. So therefore, I think there's huge potential there. It is highly endowed in a natural resource manner. There are possibilities there. So we need to make investments in terms of how do you enhance the quality of the soil? How do you conserve soil and moisture? How do you bring in new production technologies, new extension services, and also ensuring irrigation? If you are able to ensure moisture for the cropping, then what you have basically is in agriculture sense,
yeah, but I'd like you to focus a little bit on the value chain, not just on the production side, because
I think the production side needs to be really spruced up.
Yeah.
So there is surplus. What I'm saying is so interlinked. Unless you have enough food on the plate, the farmer will not produce for the market. So actually, the farmer has to produce for the market. So the kharif has to happen very well, which is what is happening now. Unless the kharif happens and there is enough food and nutrition on the table, it is inadvisable to ask him to produce for the market. So therefore, the rabi and the summer crops, through which he actually produces for the market, and obviously in the kharif season also. So these market linkages, etc., will come into existence once when the person is self-sufficient in terms of food and nutrition, and once and we're trying to now focus more and more on because we work on.
I'm sorry, Narendra, I don't have that much time. So
I'll just quickly summarize. The marketing linkage. What has happened is today the market linkages, the last mile linkages from the village to the consumer's table. I think there is a huge discontinuous kind of thing that exists. So we need to actually shorten the chain, clean up the highway, and so that smoothen the movement of the produce from the village to from the farm to the fork, as we say it. So therefore, what we're trying to do is one. Sorting, so basic processing even at the farm gate, that actually can enhance the return to the farmer about 20%. Just basically cleaning up, sorting, and for different market segments, sorting and packaging and forwarding that material, that itself enhances the value, the market value by about 20%. If you can actually hold the produce for, let's say, 7 days, especially vegetables and perishables, then you can actually play the market. Suppose there's a glut in the market, you come back, you hold it. Or suppose there is a band or something, you're not able to travel, you don't have to, the crop doesn't get spoiled. So the basic small scale, maybe panchayat-based storage and cold storage warehouse kind of system, which is low cost, but it can have massive, another 20 to 30% of, the value can be added. So we can actually reach the market as and when the market requires the produce. So in fact, the kind of vegetables that we deal with and the fruits and vegetables that we deal with, it is easily possible to enhance the total price realization of the farmer by 50 to 100% or even more. Like we were looking at some of the very anecdotal experiences. Tomato, which used to go in the earlier instances at 5 rupees at much lower production. Now, even with much enhanced production and much larger scale production, is able to sell at about 15 rupees. So it's actually 300% increase in
fantastic
the price realization.
And in fact, that gives us a lot of cause for hope, because
yes,
here is an intervention, and it need not be totally state driven. We are talking about localized small warehousing facilities of various types, right? And
have a mix of financing, some public investments.
Of course. So
farmer own
so all that you need is some sort of a coordination mechanism that can enable this, perhaps between the financial sector as well as either the Gram Panchayat or some other community level driven organization. So there
are huge investments that the government also brings in through the rural development agriculture departments. We actually need to mesh it with the the commercial investments. So possible.
Thank you. So I think I'd like to now go a little bit into the more immediate kind of a problem, which a lot of our viewers have asked for. And given this particular situation, and given the kind of weaknesses that we have on various elements related to perhaps delivery of welfare, or the fact that we have no demand. I mean, we can give credit, but what do people do if there is going to be no demand for some of their services and goods? So in such a situation, Shamika, would you like to share? I mean, there is this thing that let's have large infrastructure driven projects versus let's just give more funds directly to people's accounts using the JAM route. So your views on this?
You see, very, very immediately, Lavish, and I really hope it is not even medium term, but we really get over this pandemic. And towards that, I mean, I'm very clear. The more I think, the more I'm convinced that the road to economic recovery in India, just like I think every other country which is hit by this pandemic, runs right through the healthcare sector. We cannot pretend that this is an economic slowdown or contraction and not think of healthcare. So I think the more we invest in healthcare and invest it also from a point of view of productivity of human capital. You see, when even the data issue, let me.
So may I just sorry, I'm just this thing, and I'd like you to talk about this point that you're making, but in this context. So obviously, I mean, healthcare will have to be at the forefront to address this pandemic, but perhaps healthcare only may not do the job of some of the immediate nutritional issues, perhaps, or some of the small business related issues of existence, right? So can you just tie in all these 2 or 3 points together?
So Lavish, clearly the problems we are seeing overall with the slowdown of the growth, there are a series of reforms. And I think the government realizes, which is why you will realize that in the last 3-4 months, other than big humanitarian announcements of the type, construction workers, SHGs, front-loading PM Kisan, other than humanitarian packages, most of the economic package, so to say, has been either in the realm of making credit available through first loan, loss guarantee, getting the bankers to take on a little more risk, or it is in the MSME sector, right? But other than that, they are mostly fundamental structural reforms we are trying to undertake, either in the labor market or the agriculture market, the kind that, that has been. So I think that realization is there that you can do all these other things. But let me be very clear. I don't think any of these things, other than us squarely looking at healthcare, and the reason you have to look at healthcare is not just from a long-term perspective, that is absolutely important. But Lavish, you're sitting in the middle of so much uncertainty that today, even if we ran a massive UBI, forget infrastructure, we said give everybody cash in their pockets, it is not going to translate into demand. You will see precautionary savings go up. People are uncertain, there is fear, there is panic. The only way to handle this is more investment and clarity, more data, more work in the immediate healthcare sector. That's why I'm saying, that's why I keep reinforcing. Then the other bit of, when we talk about improving all of the productivity around financing and regulatory burden, everything, I mean, you've already heard from everyone else, but at the heart of a lot of it is also basic governance reform. You see, we can talk about data, there are great opportunities, but then we should ask ourselves, why are ministries wary of sharing data with NITI? Forget with anybody else. Why are states not willing to share data with the center? Why are PSU not sharing? So forget private versus public. Unless we really have a very serious governance reform around data and seriously bringing in analytical horsepower into the government. And I do not mean through consulting firms. I mean real, serious policymakers. We are always going to be, looking for, and also I disagree with the point earlier that was made that we know what has to be done. I don't think we know what has to be done. I have been working in financial inclusion sector for 20 years now in India. We have been saying the same stories for 20 years, Lavish. I don't think it took a PMJDY. It took a massive political force to make bank account available to everybody. But we have been conducting experiments as per the RBI since the 1980s.
Even before, actually 1960s.
Right? I remember 98, but
no, it's
what I'm saying is, we don't always know what we need to. So we have to therefore invest in very serious policy research and knowledge, building lay of the land.
On that, let me remind you that the bank nationalization took place for this purpose, so that the poor could get their accounts, right? So it's
my God.
Right?
Yes. Oh my God. Yes.
Yeah,
but those are also very ill-founded, frankly. I'll tell you,
of course,
the path to hell is paved in good intentions.
Okay. So I'd really like to take this point that you had made on the fact that health needs to drive things. And beyond that, you can do various things. But I'd like to talk a little bit also about the beyond the health. I do totally agree with you, but I'd like to ask Ajay on this issue. What are your views on the infrastructure and direct benefits to the account?
Yeah, so I think I'll begin with sort of just addressing Dr. Shavika Ravi's comment on healthcare. And on the healthcare front, I think there's no debate that there's been underinvestment for a very, very long time. However, I don't think that healthcare by itself is going to be the driver of sufficient investment in being able to re-stimulate this economy. And the reason why I don't believe that's the case is not necessarily because the need is not sufficient, that if we put that amount of capital that things will happen, but there needs to be sufficient capacity that needs to be built. If you just double the number of hospitals, but you don't double the number of doctors, it won't be helping as much. And a doctor can't be produced overnight. It is a long process. So one of the things in terms of our putting in healthcare infrastructure, I think it's been reprioritized to being a top priority, both on the capital expenditure side as well as on a revenue expenditure side. But what we have to understand about the healthcare system is it's not just physical infrastructure and equipment, it's also the capacity of, right through the system of doctors, specialists, post-primary, secondary, tertiary, and all the aligned, the schools, all of that. But that's definitely as one element of it. But the other element that Niti is very focused on right now, and, to this audience, it would be interesting and useful for me to get their feedback, is that rather than focus on the traditional sort of consumption-led stimulation that we've been focused on historically, we have actually had 6 years of deceleration in broad economic growth and credit in the economy, even prior to going into COVID. Capacity utilization of our factories had fallen below 70%. You're talking about December 2019. So going into March, it likely fell into the sort of mid 60s, and going into the June quarter, likely into the 50s. We don't know yet. RBI hasn't released the data. But any kind of stimulus that you give, trying to stimulate spending, will run into some of the issues that Dr. Ravi's talked about. She's mentioned that right now Jan Dhan accounts, if you look at them, have record sort of deposits over there. They're growing their precautionary savings. So it's not going to necessarily stimulate savings unless there is employment created. And big infrastructure, if you look at the construction industry, and if you look at the other infrastructure, upgrading our utilities, upgrading all of that, the employment elasticity of these industries is north of 1. Whereas the average of the economy is about 0.2. So it's 5 times more employment for the same investment when you look at construction or you look at some of these other industries. So while healthcare, there's an element on the construction side that can begin immediately because of that capacity. From a very broad perspective, the national infrastructure pipeline of, anywhere between 103 lakh crores to 112 lakh crores, whenever you look at that, the elements of that can be front loaded. It'll also take the load off the Manrega, which is providing subsistence wage or barely subsistence wage with higher wages. And we actually can improve the competitive capacity of this economy, because For investment, a lot of the responses we get is that, power is extremely unreliable in this country and increases the cost of, production across MSMEs, large industry everywhere. The second biggest complaint, of course, is your logistics in this country, which even, Dr. Damodar talked about in, improving that across the rural areas. And thirdly, I think what Dr. Ravi's talked about and Niti Aayog has gotten tired of talking about, because we do it all the time, is this compliance burden and regulatory burden and ease of doing business, all of that. We spend a lot of time on it. Ease of doing business, the way it's measured by the World Bank, is only 2 cities, which is Delhi and Bombay. But the rest of the country also, we're trying to spread that, on how things happen over there. So from a very broad perspective, I think when you look at trying to stimulate demand, if in those factories where capacity utilization is so low, we focus on the consumption driven, just trying to get people to spend more, I don't think it'll be as productive, because then money will come, it'll give a little boost and it'll collapse right back there. And you're not going to drive a new investment cycle that requires capacity utilization somewhere closer to 80.
So that's a very well put point. And so when you have this, I'm sorry, I'm going to ask Anand first, and then I'd like you to respond. So Anand, on this whole thing on, VCs, what is the current situation like? Do you see a lack of activity, or rather an increase in activity over the last few months, as people have gone back and perhaps started to open up accounts in rural areas or otherwise?
A very interesting thing has happened. Earlier, just giving one of the services was remittance, which was a very, very big thing of this thing. They used to originate in larger cities and go back to tier 3, 4, 5, the hinterland. Now, what has happened is the reverse flow of remittances started. People are remitting from their villages back to the cities, perhaps to their loved ones and dear ones who do not have money or otherwise. So that is one thing which is happening. In terms of the footfalls on the consumer footfalls on VC outlets, in April there was some impact, but otherwise there has been no impact. And as I was saying earlier, that this, quite frankly, is a very good time where the product's relevance has come. People, the customers have understood that if you have a Jan Dhan account, you'll be able to receive money electronically, you'll be able to pay money electronically. Just touching a bit on what Dr. Shamika was earlier referring to on the PM SBY and the PMJBY, the Jeevan Jyoti Yojana and the Swasth Bima Yojana. This is the right time. If you disintermediate the banks to become the wholesaler and the gatekeeper, just let the insurance companies deal directly with the end VCs. The products will start flying, because right now everybody's aware that their health is at risk, their lives are at risk. So the product relevance are there, because even with the huge success of the JDY accounts, bank accounts, there's the story on the insurance and the pensions is nothing to write home about. So this is the very good point, because the customers recognize the VC points. The footfalls are all right. They're very, very marginal, I would say. The business is as usual, and the truth of the pudding lies that in the last 3 months we got 2 crore JDY accounts.
Wow, that's great. I think at this point in time, I'd like to open up the table for discussion. But before that, Shamika, very quickly, you had a response to what Ajit had said.
It's not just what Ajit said also, Lavish. I think we have lost 42% of this year in lockdown, financial year. So when I say immediately healthcare, I'm talking about this particular financial year. And we have we have to really put together beyond the 15,000 crore announcement. I'm still waiting. We are still waiting. We're all, and I'm still waiting for the health ministry to put up a health budget. So even the ask is not clear right now. You see what I'm saying?
Okay, yeah.
But term and medium term. I'm talking this FY21.
Right, and that is something that is a much longer discussion than we have currently time for. I'd like to say that, yeah, that's right. So I'd like to say that, we had a question that we had asked the audience related to this topic. And the question was, should the government support bottom of the pyramid by cash transfers to through Jan Dhan accounts, large investments in infrastructure, or collateral-free credit? So can you put on the responses, please? Thank you.
Wow.
Thank you. So now we're open for questions, and the way it happens is I'm getting questions directly, so I will have to speak out the questions to you. And the first question that I'm going to ask is, and I'd like anyone who's interested to just do this, to answer this. What are the feasible ways and means to support migrant laborers to support their livelihoods through financial services at their home? This is from Narendra Nayak, CEOOSAFII. Anyone wants to answer this? Should I repeat the question?
Yeah.
Okay.
Only financial services?
What are the feasible to support their livelihoods through financial services? But if you have others, I would like you to answer that as well. But essentially, we're looking at feasible ways to and means to support migrant laborers at this time.
I can have a shot at it, I think.
Okay, I'd like Anand to give first and then Narendra.
Okay, sure.
Yeah.
So Lavish, here is a interesting thing. The migrants have gone back from the larger cities back home. They don't have any jobs there. Most of them would have been working as blue collared workers or working at shops and other places. This is a very good time to target the Swanidhi loans at them and make them productive.
Very good.
Maybe
Thank you.
Small shop, maybe something else.
Narendra?
Yeah, I think I'm just taking off from what Dr. Srivastava said. Many of these people have skills also. So they want, at least the fact that they left their village, went to a city, shows that there's some entrepreneurship. And since most of them had been blue collar workers, they had some skills in something or the other. So it is possible that many of them can be attracted to set up small shops or services, etc., back in the village through some soft loans. And but provided there is enough market for that also. Therefore, the other issue is that some of them also, or many of them also, would need to be directed to get into working on the existing economic activities there, which is primarily farming. So the earlier point which I was making, how do you actually intensify and diversify agriculture to a much larger extent, and use some of these people into doing that, and provide various services? Because once the economy actually starts getting more traction, there will be more and more opportunities for employment created, more and more opportunities for other allied activities to be created, where many of these people can be absorbed. So there are multiple ways in which we can actually help these migrant laborers stay back. In spite of it, I think about 40% will stay back, 60% will still want to go back to the cities to what they were doing earlier. Yeah.
Thank you. The next question, and I'd like Ajit to answer this, and following that, Shamika as well. Is there any national database of informal workers available? This is from Harish Harmade, Deputy Director, Khamil.
So to our knowledge, there isn't a single database that exists which is updated on a high-frequency basis to capture this. There's some of this information that is available at a snapshot in time, but it's dated. So today, when we need to actually count the number of migrant workers, we have to use all kinds of other techniques, but there isn't a national database. Now, you do know that outside of the government, while you can call it a national database, it's a private company, but CMIE has its various estimates of, on what this number could look like. But I wouldn't, while I would call it a national database because it's focusing on the nation, I wouldn't call it a government database if that was what the question, intended. So there is some data that comes from.
Okay.
I think, unfortunately, the NSSO employment unemployment round which is a quinquennial, so it's a thick round. It happens only every 4 or 5 years. is the only national level data set we have as far as informal sector is concerned. The CMI, remember, it is not a database. They make estimates based on certain sampling that they do, and that too I'm not sure is very representative at highly disaggregated levels. So there are issues with that. On the seasonal migrant, Lavesh, because this question has been asked, it clearly reflects that people are very concerned. We are all concerned.
Absolutely.
We are also concerned because we are watching TV. Most estimates that we are getting from states today are also telling us, including the NCAR sampling, the survey that they did a month back, that, the people who have gone back were seasonal migrants. Most migrants who do longer, more than 6 months, have actually stayed back. The folks who have gone back are the 3-month folks who go looking for job. Many of them have gone back. But we also now know that several of them, as Naren pointed out, are already, they're revealing their preference for coming back into the cities. So I think people are highly resilient, even without us, the nature of current economic relationships and networks are quite entrenched. They will come back for jobs. Now, in the meantime, I think going back to your previous question, should it be infrastructure, high productivity driven?
I'm sorry, I don't want to get into that now. Because
but the answer is, eventually it amounts to that are we thinking of transfer driven growth strategy, or are we thinking of a productivity driven growth? It's at the heart of this discussion.
Okay. I'd also like to add to that, that though there are no national databases of the informal sector, the government has a very good mechanism of following up on overall employment numbers, both in the formal and informal, through the NSS, which obviously data that's not being released for some strange reason, and it was released last, I think, about 6 months back for 2017-18. But I think more importantly, sometimes for some things you really don't need a lot of data. The informal sector is something which is so large that and our policies are so minimal on those that actually you can very easily you can be blind and shoot and still hit the informal sector. It's so pervasive. So perhaps we are thinking too much about the need for data when something is all around us. Having said that, there is still a need for data because the point that you're making, Shamika, cannot be addressed without a comprehensive data. The stories that I hear from people who are going to villages, I'm hearing of communal riots happening or communal disturbances happening at the village level because migrants are going back and hitting at occupations of people who were already there. Or for that matter, households breaking up because people are now demanding their share of the land. So there's a lot of distress associated with it. It may be seasonal, but I'm not so sure. I mean, I would like to see a more comprehensive study before I make up my mind. But Narendra has been putting up his hand, and then after that, Anand. Narendra, you wanted to say something?
No, I didn't put up my hand. Sorry.
Okay, all right. Sorry, Anand.
Quickly, quite frankly, we are sitting with the data with our members, close to about 50 of them have they used to handle remittance of about close to about 38 million of the customers. So within the 50 odd corporate BCs, there is definite data on the mobile number, the bank account, and their Aadhaar. So only required is a big data analytics to just put it together. Maybe Ajit can help us.
Thank you. I think we have about 5 minutes left, and I think it's time to start wrapping up. I have a few more questions, but unfortunately, I don't think I have time given our deadline at 4:30. So what I'm going to try and do is give you all a minute to just share your last thoughts on this matter. And I would like to start this time in the other direction. I'd like Anand to go first, and then we'll go to then after that, Naren.
So the simple thing, Lavish, here is please disintermediate people who are not unnecessary in the delivery of. I'm talking in the context of COVID and the delivery and data services and other things. Take away the banks. Let it be directly interact with the corporate BCs to deliver the credit, whether to the retailers or to the MSMEs. first to credit. I'm talking about. Similarly, remove the banks and let the insurance go directly to be distributed directly to the BCs, to the end customer. And same thing for quite frankly, RBI, IRDA, and PFRDA need to step back and just allow that. Let banks, insurance companies, other people do very good
Great.
jobs.
So I get it. So essentially, let the private sector do its job, reduce the regulatory burden,
and disintermediate.
And disintermediate.
Yes. Can I?
Yeah, very quickly.
Yeah, very quickly. So I think what the pandemic has said, or in the sense the pandemic hasn't taught us anything particularly new. It's all issues that we already knew, but pandemic actually brought it in much sharper relief to our face. That the growth strategies in India doesn't need to be on the way. It needs to be much more grassroots and village focused, and villages need to be much better places and more aspirational places for youth to stay back. And therefore, we need to create a lot of opportunities in the village, and just cash transfers and Jan Dhan Yojanas cannot create that. You need to really invest and bring in large scale public investments into the rural areas to really build up the rural economy and its resilience, so that those who migrate, which we said at least 50% of the young people will migrate, but then they go as more aspirational migration and they do not go on a distress migration. And today, from a Jharkhand or a Chhattisgarh, people are just running away. And that's very
that's a great point. Invest more on the rural value chain.
Yes.
Not just agriculture, but rural value chains.
Make villages more aspirational places.
Fantastic. Shamika?
Well, I think, again, I want to focus more on the immediate term, Lavish, because it's on all our minds. I do think pathway to economic recovery in India goes only through the healthcare. I have not seen or read anything from any other country which gives me a hope that we can do all of these wonderful things and think that we will come out unscathed while we're in the middle of a pandemic. Beyond that, continue with the structural reforms, I think, which we've reinitiated in the last 3 months.
Thank you. Ajit?
Yeah, I'd just like to address something that, Mr. Damodar said a short while back, which is he said that he saw the rural economy particularly weak. And he also talked about the Ram Bharosa there. What is very interesting about the current Kharif crop that this country is seeing is that the planting, based on the data that we have, is 40% higher than previously.
True.
It's both a function of the better rainfall this year and earlier rainfall, but also a function of the labor that is available in the rural areas currently. The second factor that I'd point to is that when you look at typical agri-spending, agri-related or rural-related spending, you'll see that the drop in the rural areas in consumption is much lower than in the urban areas. So our big concern early on in the lockdown was actually the urban poor. All the hawkers you talked about, all the people.
I'm sorry, we don't have that much time, Ajit. So if you can just very quickly wrap up.
Yeah. So I would think that the kind of structures that we have to look at right now, are on the rural side, whether we really want to retain these people there or they're just going to be moving back. So the Manrega and all that will fall. But that when we were thinking of the social, infrastructure that we need to put up, it is for that migrant worker in urban areas. Because it is this urban area which the urban poor that are actually the ones falling from above the poverty line with much higher incomes to below the poverty line because of this change that has been sort of catalyzed by COVID.
Thank you. Thank you. So I'll very quickly, I am at 4:30 and I think we'll go 1 minute after my remarks about time. So what we have, and we have had an amazing conversation where what comes through is that we have an opportunity which is massive in the sense that we have technologies, backends there, the large institutional structure right there, the latent demand being right there. It's just a matter of converting all of those latent potential into a more dynamic and active one. And for that, the critical need is for the states or the government to start to get a much more responsive to the emerging challenges that there have been. And I think that might be one fair way to try and, in one line, summarize this discussion, because resilience essentially will require the state to play a role which is at one level proactive, but at the same time is very light touch. And with that, I'd like to close. Thank you very much. It's been a great conversation. Great having you here. And thank you, Access. Thank you, Radhika.
Thank you, everybody. Thank you, Access.
Thank you,
Thank you.
Lavish. Thank you.
Thank you.
Thank you.
Well managed, Lavish.
Thank you.
Thank you, everyone.
Thank you so much, Lavish, for beautifully moderating. And of course, we will take some credit of putting together a very good panel for you.
Thank you.
To moderate. So thank you, all of you. And I'd like to mention that while we received about 435 registrations, we know that not everybody who registers actually finds the time to log in, but we got over 245 people who online logged in to hear this conversation, and then we'll put this out on recording and send this across on social media. So we hope a few more will find the time to watch later. So thank you once again, all the audience who were watching this live, and once again, thank you to all the panelists. I think were able to have a forward-looking, positive conversation, and how Lavish closed it was that it is an opportunity. So obviously we are not cribbing too much, but looking at how to move forward from the current situation. So thank you, and have a good evening, everyone.
Thank you.
Thank you. Thank you, everybody. Thank you.